Hello, it's Carolyn Grimm. I'm here to talk about fund accounting and why that is such an incredibly important part of nonprofit accounting and nonprofit financial management as a whole. So the whole reason that we use fund accounting in nonprofit accounting is to make sure that we are keeping track of funds that are being donated to us or grants that we're receiving. So I think of fund accounting like a series of buckets. We put money into one bucket, and if it's for a particular program, we're only going to spend funds for that particular program from that bucket. The whole purpose of fund accounting is to help us keep track of where those funds are coming from, what the reason we have those funds is, and how we're supposed to be spending those funds. So if we got donations to build a playground, we're only going to use those funds to create that playground. We're not going to use them to buy paper towels for the office. We're only going to use those funds to buy the things that we need for that playground or to hire the contractors who are going to be doing the site work for that playground. So fund accounting is the method that we use in order to keep track of those funds to make sure that they are going where they are supposed to go and that we can report back to a donor or a grantor and say, this is how we spent those funds. So what fund accounting does is it helps us to segregate our funds, put them in specific accounts, and it helps us to have the transparency and accountability that we need for those people who are donating funds to our nonprofit. So when we're talking about fund accounting or nonprofits in general, what we want to make sure of is that we are doing things in a way that is transparent, it is accountable to our stakeholders, and that it's building trust. That's a big part of what fund accounting allows. It allows for us to build trust. It makes sure that those donations are being used for their intended purpose, and it also helps us to stay in compliance. Let's say we get a federal grant and we want to make sure that we are staying in compliance with the terms of that grant. Well, if you've got a whole big mess for an accounting system, it's very difficult to do that. So fund accounting is what's going to kind of keep us on that straight and narrow. We're going to have our lanes and we're going to stay in those lanes and make sure that everything is being accounted for as it should be. So what fund accounting is at the base is it's a way for us to separate out those financial resources by purpose so that we're not spending the funds for the playground on our after school program, even though they might seem like they're related, they're not. They have to be kept separate. Fund accounting also gives us a way, using usually automated accounting software or a spreadsheet, because, us nonprofit people, we love our spreadsheets. So it allows us to track the income and the expenses for those specific donor restrictions. And then it helps us to fulfill our mission and to demonstrate financial integrity. If you ever want to get rid of a grantor, do things in a way where they don't feel like you are being on the up and up and taking good care of their funds. That's the best way to lose a donor. Fund accounting can keep that from happening. So with fund accounting, what we're going to be doing is we're going to be setting up those separate buckets for different purposes. This is for our after school program. This is for our playground project. This is for our spay and neuter program. The spay and neuter program would not be related to the after school program. Sorry. Don't get those confused. Keep them in the buckets. So as part of fund accounting, what we're going to be doing is separating our funds into restricted and not restricted. So those restrictions could be coming from the donor. The donor is saying, I only want this used for the playground. Or it could be from the board saying, we want to make sure that we have a reserve. So we're going to set aside a certain amount of money every month in order to build up our financial reserve. So we're restricting those funds, not because a donor wants us to, but because the board of directors says we have this goal that we want to create a reserve so that we have emergency funds. And then having that set up so that we can track specific money coming in, specific money going out for programs. So having fund accounting in place means that we're then able to be accountable, whether it's to a donor or grantor or to the board of directors. We can say, look, we are doing what we are supposed to be doing with those funds. And here's the reporting that shows us that things are going exactly the way that we intended for them to go. So the way that fund accounting works is we're going to have, usually if it's a project or it's a grant, there's going to be a budget that's attached to that. And fund accounting is going to help us to keep track of the money coming in, the money going out, the reporting process, and again, accountability and transparency always. So how do you track and report those funds? Usually, you're going to be using some sort of financial software. It might be QuickBooks, QuickBooks Online, or it might be a nonprofit specific software like Financial Edge. If it's not software that's specifically designed for nonprofits, using something like QuickBooks, QuickBooks Online, we're going to set the system up so that we're able to track those funds. So if it's something like QuickBooks Online, we're going to modify it so that we're using things like classes or projects to keep track of our funds. We'll then be able to use that software to tag those transactions that are revenue for a specific project or a specific program, and we'll be able to tag the expenses to that project or program. From there, we'll be able to run our reports for our statement of financial position, statement of activities, and our statement of functional expenses. That ability to run regular reports is going to help us to satisfy that transparency requirement. Some mistakes that you'll want to avoid is mixing restricted and unrestricted funds. I've seen this particularly with small nonprofits. They may have a restriction from a donor that goes back 30 years and nobody even remembers what it is. So it's really important to have those restrictions documented and have it set up within your accounting system so that you can track what those restrictions are. What's the restriction behind these restricted funds? What was the whole purpose for this? Because that can sometimes get lost because so often we have so much sitting in our heads and we never actually put it down on paper. So that's really important to make sure we capture that. Another thing we run into is, let's say we've got extra funds in our playground account, and right now we need some funds over here in our after school program. It's tempting to grab some of those funds and just bring them over. If you're doing interfund transfers, it can get really sticky. And again, coming back to transparency, making sure that we are providing clear reports on a regular basis to our stakeholders. And that might be that our donors, all they want to see is the annual report where we say we helped 47,000 children in this after-school program, or that their donations allowed us to feed 27,000 children. They may only want that much, but grantors are going to want more information. They're going to want very specific information about how the money was spent and what the impact was of how that money was spent. Grantors may want more than that. They may want to have some very specific information. How much was the grant, how the money was spent, whether we ran into any problems, and what the impact was. How many children participated in our after-school program, what the results were, and what the impact was on the community, the families that we serve. What was the impact there? Is the impact achieved worth the money that we gave you? What if we had given it to some other organization and they had had a stronger impact on their community? So grantors are going to be looking for much more specific information. And our board members may be looking for specific information. They may want those financial statements, but they're also going to very likely want to see how much money is left in each one of those funds so that we can make sure that there are funds to complete that project or that program has enough funds in order to run for another month. All of those things are going to come from good fund accounting. So key takeaways: fund accounting ensures financial accountability and transparency. You will hear me say this 100 times. So important. It allows us to properly track those restricted funds or unrestricted funds, or temporarily restricted funds, and what that temporary restriction is. And it builds donor trust, which strengthens the entire organization. So fund accounting, extremely important that it's set up well and that it's used correctly, because that gives us everything we need in order to run a financially sustainable nonprofit.